Hi,
Hi Linda, how's it going? Good afternoon, everybody.
good afternoon.
How's everybody doing? Hi Kelechi, can you hear us? Hello,
Yes,
Kelechi, can you?
I can. Good.
Oh, okay, perfect.
Yes, I can. Can you hear me?
Yes, I can hear you. Hi
Okay.
Tolulok. Hi Tolulok, can you hear us? Hello. Oh, Tolulok is just joining. Hi Tolulok, can you hear us? Can anybody else hear me? I can't hear Tolulok.
I can hear you, Martin. We're struggling to hear you, Tolu. We still can't
Hi
hear
Ty.
you.
Yeah, Tolu, we can't hear you yet.
Can you hear me now?
Yes, perfect,
Yes, we
perfect.
can.
Hi Taiwo, how's it going?
Hi
Taiwo.
guys, how are we doing? Confirm you can hear me.
Yes, yes, we can hear you now.
Can hear you clearly.
How's it going?
Yeah,
Yes, we
Okay,
can hear
thank
you
fine,
now.
you.
thank you.
Hi, Taiwo.
I, I, I was initially going to use the background of a virtual office, but I said
Oh,
let me
nice.
follow the sync with everyone.
I guess if you are talking about office, everybody can
She's like,
flex their muscle
I'm
in
going
that regard.
to listen. I have a
Yeah,
speaking thing.
Okay, beautiful. So we'll just dive right into it. But before we go, I'll just do a bit of
Like
back.
a yeah, like a webinar, yeah.
Um, Tolulope, you are speaking and you
Oh,
are not me.
sorry. I'm not me. I'm sorry. I'm just moving locations. 'Cause
Okay. You can
we
mute
still have
yourself
2 more
too.
minutes, no?
Yeah, you can mute yourself.
Okay.
Yeah, started.
Yeah.
Okay, so we have just 1 minute to go and we'll dive right into the conversation. But I would like to do just a quick introduction. So, our audience, we have a lot of people joining from LinkedIn. They can get to know the people on the panel and the speakers and get to know what this conversation is about. So, I have um, with me as part of our speakers, I guess I should just start with the ladies first. And start with the person next to me immediately. So we have on this call Tolulope. Tolulope is a senior associate at Trillium Real Estate Partners. They're a commercial real estate advisory company focused on West African market, particularly Nigeria. And then Tolulope, can you say hi?
Hi guys.
Oh, okay. Yeah.
Mhm.
And then we have Kelechi. Kelechi is the general manager at Cafe One, which is owned by Sterling. I don't know if there are any other investors in Cafe One, but at least I know Sterling. And Kelechi is the one managing the project, the Cafe One
We're
business.
not owned by Sterling.
Oh, really? Your partners with
Yeah,
Sterling?
we
Yes.
have we have a yes, partners dot not
Okay.
owned. Very separate
Okay, I like that.
entity.
Thank you for that clarification. And it's good I said it so we get it straight. And Kelechi is the general manager at Cafe One. She is responsible for running the Cafe One business. across all the regions that they operate. And then we have, oh, Kelechi, you want to say hello? You're muted.
Hi, everyone. Good evening. It's nice to be here.
And then,
Okay, I think, can you hear
yeah,
me?
we can hear you. We got that.
I think there's a, okay,
Yes, we
there's
can
a,
hear
okay,
you.
all right.
We can hear you, Kelechi. Okay, and then we have Linda. Linda is the managing director at Africa Works, covering the Nigerian market. For those of us who, I mean, stay around VI or move around VI, you probably have seen Linda's office. And she's essentially in charge of the Nigerian business for Africa Works. And she's going to be sharing perspective, on the market from high experience over the years. And last but not least, we have Taiwo. Taiwo is the country distribution manager, yes, for Canon. I think nobody needs to explain who Canon is or what Canon is about. And Taiwo is, I mean, joining us on this call to share some perspective from an occupier standpoint. And I'm super, super excited to go over this conversation with everybody in the room. And I'm really hoping we'll get to learn a lot from your experience and perspective on the market. So just to kickstart the conversation, I'm going to present a very quick document. I like to say that the small presentation usually serves as an icebreaker, but I don't know if data should be an icebreaker though. But whatever the case is, let's get started. So my team have been tracking data within this market for the past 3 years. Just wanting to understand what demand and supply is looking like. And actually today we are launching a flexible office market report. I think that will be the first report or effort to produce a market report that is covering that segment of the office market in Nigeria. And our hope is to expand it to other regions across the continent. And just to, before we dive into the conversation we're having today, I think over the past 10 years, I can say that over the past 10 years and more, the expectation of a very good economic performance from a macro standpoint drove a lot of investment in the office sector. For those of us that are very familiar with the office market, particularly in Nigeria, it drove a lot of investment in the office sector, especially within the prime office segment, so the grade A's and the B plus development. And that was when projects like Heritage Place were introduced, the wings 10, 12 years ago, and all of that. So that positive sentiment on the market informed development decision within that period. And what happened was that developers and funds were hoping that the economy would do much better and FDI will flow into the country, multinationals will come in their masses, and they looked at the market. There is nobody providing quality grade office spaces to house the likes of Taiwo when they moved from the US to come into Nigeria. And so people were building grade A buildings, grade B plus, and those quality assets. But the truth is, the economy didn't pan out as positively as everybody projected. And so what happened is FDI didn't flow in as everybody anticipated. Multinationals weren't trooping in as everybody anticipated in the 2015, 2016, 2017 down to 2020. And then COVID happened and it even worsened the situation. And a lot of projects that were already in the pipeline for delivery, a lot of them got completed, some were stored and all of that. And what we saw recently in the market, that there was an oversupply in the market, especially for the prime segment, and vacancy rates were increasing. And then COVID happened. And when COVID happened, people realized that this thing I'm paying thousands of dollars for, I can actually get my team to work from home, or at least work flexibly, where hybrid system where some people come in a few times a week and the others come in the other times, or at least downsize my footprint so that people who can work from home can work from home, and those who need an office can still, I mean, we can reduce our footprint and get fewer people into the office. So we saw a lot of multinational exits from the market. We saw a lot of downsizing activities in the market, and overall, there was there was a general shift in consumer behavior. So people weren't needing as much as the large scale footprint grade A buildings that the market, was used to, and people were now looking for more flexible solutions to accommodate their needs. Whether that flexibility is allowing me to exit when I want to exit, allowing me to have just 10 people within a floor, which you can't find in any grade A buildings, and all of that. And so what that did to the market is driving a shift in how corporates, even multinationals, interact with office space within the Nigerian market. And that shift from the rigid traditional system to more flexible system where co-working spaces, managed offices like what Linda is providing, and other people on the call, and Cafe One, and more flexible spaces are becoming frontline in consumer, or rather occupier preferences. And so based on our data over the past 3 years, we tracked over 133 operators who are active in the Nigerian market, over 1,000 occupiers who are active in the Nigerian market, over three geopolitical zones covered, so Lagos, Abuja, and Port Harcourt. And what we are seeing is a lot of the stock, grade A stock and B stock in the core market is being exited into grade C, B at best, flexible workspaces that traditional and international operators are coming into the market to provide. And so just to kickstart this conversation, there is a shift from what used to be the, I would say, the formula for office acquisition in this part of the world, which typically used to be the traditional leasing route, to more flexible spaces that even multinationals are opting to. And this conversation is just gonna dovetail around what that shift means for the market, especially from an operator and occupier standpoint. And I think with that context, we'll just dive right into the conversation. And I'll start with you, Linda and Kelechi. First of all, based on all that I've said, I'd like to hear your perspective on some of the changes in demand pattern that you have seen. I mean, especially for you, Linda, you've operated both at the traditional side of the market, and you've moved with the tide, I would say, to where the demand is now flowing to. What has been some of the changes in occupier behavior that you have seen in the market, and how is that influencing some of the product that you are launching, to the market at Africa World? Yeah, you are muted, Linda.
Thank you for that beautiful introduction, Martin. Good evening, everyone. Nice to be here. Nice to meet my co-speakers as well. Okay, just going right into it, to the question you've asked me, and then I'm speaking from experience because I've worn double hats here, both on the traditional side and now on the operator side of it. And I can tell you that the shift that we've seen prior to this time, I think when you're engaging clients who are looking for office spaces, you tend to engage with some key questions, which would include your size, what size are you looking at? What's your cost or your, those are the key questions that you tend to ask. But now that conversation has tilted a little bit, and it has completely shifted from that core question. When you have an occupier who is in the market looking for space, the question you ask now is, what's your team size? And that's because a lot of multinationals, we're seeing a lot of multinationals are moving away from the traditional leases, traditional spaces, because it just has there's a lot that goes into having a conversation with traditional space. And from the back burner, you have to start first from sourcing the space. When you get the space, you have to think about fit out. When you fit out, you have to just so many processes down the line before you eventually get to occupy the space. And to give it a timeline, I would say for you to actually source and conclude on a traditional space, we would say between 6 to 12 months. That if things move quickly from both parties, rather than the occupier side. We've seen transactions, linger beyond 12 months, 24 months, even in most cases, depending
Yeah,
on
I'm
how
talking,
each
I'm talking
party is.
leasing and fit out.
Yes, I'm talking, yes.
Basically, yeah.
Yeah, basically, yes. So, right now it's boiling down to how, multinationals are now thinking of how does a space actually fit to their team requirements. It's no longer about size or budget. It's now about the headcount of the team or the basic requirements of the team. So we're seeing I'm seeing patterns of multinationals now having or becoming multi-users, having multiple locations, as against the typical consolidated approach that we used to or we're used to seeing. Right now, multinationals operate based on there's a project team that needs to sit on the mainland, or there's a mainland team that needs to be on the mainland, and there's an island team that needs to be on the island. How do we get them spaces that gives or grants them access to use the workspace whenever they want to? Now, we're also seeing some changes in behavior in terms of how people consume or how people use workspace. So now we're seeing that, there are people now who actually like the working from home thing and they want to maintain it. But because people are very relational, there's a need to keep in touch with the team because it enhances team bonding. So they're moving
Yeah.
from that to, okay, we're working from home, but there's now a need to meet at least once in a week.
Collaborate.
Yeah, to collaborate once in a week, once in a month, or twice in a week, as the case may be. How then do you provide us something that fits for that kind of request? So it has also changed our product because we're beginning now to think about such kind of people, and how we're able to meet those requirements. Thank you. I think I've said enough.
I think, yeah, you mentioned a few things that I think are super important to note. I think there's been a shift in terms of occupier requirement, and we are even seeing it from an advisory standpoint. People are no more concerned about size or budget and all of those things. They are more looking for offices
Yeah.
that are flexible or agile to meet what their team needs, because we are seeing people demanding more satellite locations. I have folks on the mainland. I need a satellite location to serve them on the mainland, so they don't waste 3 hours commuting to the office on the island and all of that. And that would just take me to the question I have for you, Kelechi. In some from your experience running Cafe One, what are some of these I would say new requirements that corporates and even smaller size teams are needing from their offices beyond
Okay.
just desk, beyond just an empty space people can work from? What are, from a feature standpoint, what are people caring more about now and expecting from their office?
Okay. So for us at Cafe One, it's a bit different, right? Because we started off as a co-work space. So just hot desking. We had
Mhm.
one location that has now grown to 26 locations.
Oh,
And
wow.
individuals would come in, they would sit, they would work, and they would go. Now, as the more we interacted with our customers, the more plans or products we started to come up with. So we then started like just by understanding their work pattern. Some people want just one day, so we have a daily plan. Some people want, oh, 1 week, they have a weekly plan. And this is also for people who maybe move around a lot. We have the monthly plan, the annual plan, the biannual, flexi monthly. There's so many of them. And so we started out just catering to individuals. But post COVID, we then started to see that more teams were coming to say, oh, I have 5 people here, I have 6 people here, I have 3 people here. Can I get a plan for my team to work? And so we started to create those plans for them. But it also greatly
These are more
influenced
like
the
shift
design.
from. Yeah,
Sorry.
sorry to cut you short, but you are saying this even from your brand strategy, there's been a shift from an end
Oh, yes.
user B2C type solution to more B2B.
Yeah, so we started off as B2C, but now we're doing B2B, we're doing B2C. So we had like small businesses come to us to say, I have, 4 people, 2 people, 3 people, I want to pay for a plan for them. We created that. But then it also, like I was saying, influenced the design of our spaces, because our
Mm-hmm.
spaces were primarily just like, hot
But the
desks and then 1 or 2 meeting rooms, but the demand kept getting more. So we started to infuse office spaces. So, like dedicated office spaces within our already existing, co working space.
Mhm,
And then we've gone from that to now having full buildings that are just servicing organizations. I think the
mhm,
most important shift that has happened is not just companies wanting spaces for their staff. It's companies saying, hey, you guys do this hospitality and service thing well. I don't want to have to worry about how well, my staff are faring. I don't want to worry about any of these things. So you know what, Cafe One, just set up a space for us, service it, manage it. We'll just show up when we want to show up. So we've basically seen that shift go from just individuals to smaller teams and now even big organizations. I think something is in the air, especially this year in 2026, because there's been an increased demand for, companies saying, hey, we don't want to worry about finding a space and managing it. Just help us out.
Yeah.
Find it, set it up, we'll just come in. And so, yeah, the summary of the gist is there's definitely been, a behavioral
A
change.
spike.
Um,
Yeah.
yeah, there's been a behavioral change, and it has affected, the products we offer and our design, like the very design of our
the space.
spaces. And yeah, yeah.
Okay, I think I'm aligned with you, Kelechi. Yeah, I think I'm aligned with you, Kelechi, and I think you raised a very important point, which I would like you to or Linda to double click on a bit, which is the shift from, I mean, the market is informing a shift from a B2C led solutions in the market to more B2B. I think and just to give you an instance, when we started tracking data in this market, I think it was 3 years ago, more than 57% of the products that were in the market were more B2B, B2C focused. So you have a lot of co-working spaces, hot desking, across the country. But the data we have as of today, that number has dropped from 57% to around 52%. And that is just in um, I would say less than 3 years actually. So there's clearly a shift from even a product standpoint in the supply is shifting from just traditional hot desk in terms of their stock to more spaces tailored to small businesses, multinational, satellite offices, 4 desks, 6 desks, 8 desks, 12 desks, and even up to 15 desks as the case may be. And Linda, and I'm sure you probably are seeing those kind of shifts in your business. And I'm curious to know what has been, I would say, the profile of some of these corporates that you are seeing more demand from um, over and above the freelancers and the guys that typically would go for co-working spaces. What has been like the profile of these corporates that are needing more spaces? And some of the data we have are really shocking because we are seeing even more multinational companies needing satellite offices, Fortune 500 companies in the market needing satellite offices and preferring managed to to traditional offices. But what has been your experience in terms of the profile of B2B customers that you are seeing?
Okay, so you've said it all. The profile spans across multinationals, Fortune 500 actually requesting for this. But again, I would like to highlight that we've noticed that a lot of companies actually want that easy entry and easy exit.
Okay.
And
Right.
a lot of people don't actually know that there's a lot of companies that come into Nigeria quietly and they
Mm-hmm.
exit quietly. They've been in
Yeah.
the country for 12, 18 months, you know, probably just to get a sense of what the Nigerian market is about. And they've
Mm-hmm.
seen from the populations that, you know what, it's not worth it. They just gradually exit without no
Mm-hmm.
noise, without no visibility, no publication, nothing. So a lot of such companies, so I see, okay, so our spaces are more of a stopgap, right, for most of these companies because they come in first of all to test the market,
To test the
and then based
waters.
on how well they progress, then along the line, if we're not able to cater to their need, they can now go over to the traditional space. So we're
Mm-hmm.
first of all like a demand absorber, first of all. We cater to their need, and then afterwards, they tend to now break out to the traditional spaces. Um, Also, we've seen companies who actually values flexibility. And flexibility is ability to scale up, ability to also scale down.
Yeah.
And I've also witnessed both, where companies come in initially, they start from a private office of, say, 5-man team. And then within the next 3, 4 months, they are able to scale rapidly to a team of 10, a team of 15, as the case may be. I've also seen cases where members come in, with a team of 10, and then after 5 years, they scale down to
Mm-hmm.
5 because, businesses have not gone as planned, or they really didn't do their calculations right, or whatever, uh, HR strategy they intend to apply to their staff, whatever the case may be. So I would say these are it cuts across. We've also seen local players as well, local Nigerian oil and gas players as well, who really
Yeah.
have identified this as value for them, and they tend to start off with being in an operator space versus
Mm-hmm.
going to traditional space. So it cuts across corners, right? It's a matter of how the company sees it, and
Mm-hmm.
what is driving that request,
Yeah,
right?
I agree with you. I agree with you, Linda. I think what we are seeing is a shift from, I would say, permanence, that people used to think, the way people used to think as an office as a permanent HQ, a permanent
Mm-hmm.
presence to, make a statement in the market, to more lean, easy to test, easy to iterate type solution.
Yeah,
That level of flexibility across the board, whether it's multinational or local startups,
yeah,
we are seeing that happen. We are seeing that happen a lot. In some cases, they're able to scale up from that lean structure to more permanent thing. But we are even
yeah,
seeing people staying within as long as 5 years, as long as 10 years, within a money space, and just moving around because that flexibility. And I would like to hear from the horse's mouth, actually, because we have an actual tenant in this room. And I would like to hear, Taiwo, your perspective. What is informing your occupation strategy? And what is particularly informing the preference for flexible spaces? This is Canon. Canon can build a another grade A building in Ikeja, but Canon needs to stay in a managed office. Canon has the pocket to build another tower. In fact, double towers in Ikeja and Victoria Island combined, but you are choosing to stay in a managed space. How has your thought
Mm-hmm.
process around what an office should be changed post-COVID? And how are you thinking about your occupier strategy, your office strategy in times like this?
Okay, thanks everyone. From an occupier standpoint, I think post-COVID, companies have reinvented how they want to occupy markets and territories, particularly their footprints. Some companies have decided that they will not no longer absorb long-term office, right? Just as I think Linda mentioned, they want to be able to scale where it applies, and most importantly, optimize efficiency. So for us as business, we look at areas where we can optimize efficiency. Of course, flexibility is very, very important. From an occupier standpoint, we also don't want to own assets, right? We would rather manage cost control than square meter expansion, right? So we'd rather see where we can absorb cost, optimize cost in terms of how we want to start off. So for example, I give a class example. When we first started in Nigeria, there were just three of us, right? And at that time, when we were just three of us, we got an office space for 10 man, right? So it was like a room and parlor.
No, it's Canon signature thing.
Yeah, which was like a traditional office space. And then we moved from 3 to 5. And then when we moved from 5 to 10, we now had to look for another space, right? Because we're expanding. And then this was where we thought about, okay, why don't you get a co-working space? And as at the time we're now expanding into beyond 10, we thought of, okay, how do we increase our footprint across the market, right? So some colleagues of ours as at that time had to go to other cities to operate out of. And then it now came back to, okay, how do we now reduce our office size in terms of space, right? So this was where the concept of co-working space came in. So instead of getting our space, why don't we get a co-working space that we can scale? It absorbed a lot of pressure from us. One, pressure from power, security, parking, connectivity, service quality. That's not the hassle that we want to be facing, particularly when our primary objective was completely different from that, right? And that going in that route will require us having some sort of facility team managing that operation. So in terms of efficiency, we just said, okay, you know what? Let's take away that burden from us and then find quality service provider. The most important part is quality service provider, because from the time we started till now, I'm sorry to say I have met a lot of quacks that provide this type of facility. One, connectivity was messed up. The quality of the space was crap, because one of the things we also want to do is collaborate within the office space, right? So collaboration is impossible if the setup is not accommodating, if I was having to deal with the smallest things, the paint, the type of wood used, the quality of the internet, and then of course, for us at the type of company, our goal was to be closer to the customer, right? So where we're operating out of is where we have access to where our clients are, right? So that prime address used to guaranteed us demand for the services that we're trying to get. And about how do we go ahead to ensure that, excuse me, how do we go ahead to ensure that we are not investing in office assets? Because we've also seen that office assets require huge active management from a service delivery standpoint. We didn't want to rely on that as well from a company. And then we said, okay, you know what? It's critical and important that we move all of this to a quality service provider. I would keep on emphasizing on quality service provider because that's the most important part that we do want to absorb. For us as occupiers, we are looking at optimizing efficiency, flexibility, and cost control.
I like that. Yeah, I like that. And thank you, Taiwo, for mentioning it. I think you said really, really heavy things that I believe Kelechi and Linda can allude to. The most important thing is outsourcing the operation of running an office. I think people don't understand how much of a distraction that whole process is to a team. Imagine spending 12 months to source a space and build it out. You now hire a facility manager, an internal operations team to run the day-to-day operation of the space. You are expanding. I mean, for a relatively mid-sized, company coming into the country, you are expanding your team size by almost 30% to 40% just to run operations, which is very heavy. And thank you, Taiwo, for mentioning that. And I think one other thing you emphasize is quality of service provider and the quality of build of the space. And I think I'll just circle back to Linda and Kelechi real quick. How has things like this shifting requirement in terms of quality of service and quality
Mm.
of build, how is it informing how you design spaces and how you provide, your services? And I know, Kelechi, you had mentioned a bit of that around how, the change in occupier behavior influencing your design. But I would like
Yeah,
to touch on it from a service
quality
standpoint,
perspective.
a quality of service
So,
standpoint. And Kelechi, you can actually go first, and then we'll come back to Linda.
okay, so when he was talking, I was smiling because I know just how important it is for our clients to have like good internet or the quality of the table or the paint. So when he was saying all those things, I was just smiling because it's like, yeah, they're all the same, and it's important because imagine, like you rightly said, you're trying to sell, right? You're primarily a sales organization. You want to push the Canon brand here in Nigeria, but then you're worrying about, oh, there's no internet in the office, oh, there's no water, oh, the place was not cleaned. Like, so those minor issues can be very distracting, and that's where service providers like us come in. So I would say that yes, the demand that our customers or members of our community have, it has, so we, for example, when Starlink launched in Nigeria, I think the following week or so we already had like requests like, oh, let's switch to Starlink, let's switch to Starlink. And that just shows that people don't joke with the quality of the internet that they're using. So we have to move with the market, right? They always say customer is king. So there is no location that I set up now that doesn't have a Starlink as primary internet source and then another one as a backup secondary source. Then in terms of just the general quality of the space, people, I think we started off seeing a lot of people want like, oh, those demarcations, those tables that have demarcations where two people can sit across from each other. So people say, no, 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 we want to foster more communication. And so we've taken those off now. I want to see the face of the person that I'm working with. I want to be able to interact with other people. So those small things, small, big things have just somehow shifted. And then there's obviously the most important one, which is the quality of the space. You cannot be paying a premium amount and then you go in and the chair has broken, or you're having, your back is hurting because you're sitting on a chair that isn't ergonomic for a couple of hours. So when we started our very first location, we had so many complaints about like the furniture, and we kept changing and changing and changing. Even till today, I visited a space and I saw it and I'm like, I like this chair. I think I want to switch to this chair. So we're constantly improving on the quality of the experience that our customers are getting. And if customers are not happy, then you're not doing a fantastic job. So we listen to them, we take the feedback, and then just as times are going, there's better quality stuff coming up, right? I mean, I know there used to be a time when satin paints weren't that like common, but now, because you can clean it easily, people have switched to that. So there's just all of these small and really big things that are changing, along with the times. So yeah, that's it.
Thank you, Kelechi. And you mentioned one thing that I think is super important, which is just paying attention to the customer, what they need part time, and how that need is shifting. And in that will bring me back to you. How is a lot of these, I would say, changes in focus for the business that you serve, is how is it informing how you think about space delivery as a service, whether it's from a added service standpoint or the core real estate space standpoint? How are you designing? How are you building? How are you deploying all of the layered services to meet their needs?
Okay, so for thank you, Martin. And just to go back to what Taiwo had said, a lot of people actually tend to confuse quality for aesthetics. And
Mm-hmm.
so during the viewing stages, people are blown away by, aesthetics, how colorful a space is. But the core thing, the key thing there is the quality of the services provided, which
Yeah.
you don't get to see until you are now
Mm.
actual occupiers.
Yeah.
Unfortunately, that's the way it
Mhm.
works. So it is until you start occupying a space that you can now tell that, oh, the internet is crappy, the power is not stable, all the issues that you actually are trying to avoid is what you would meet. And so for us as a company, quality is actually non-negotiable for us. Um, we have very super efficient team that tracks, our key services. So power, internet, cleaning, maintenance, as the case may be. And in terms of how we actually now go into designing spaces, we've had lots of occupiers, coming to chip one or two to us. Some
Mm-hmm.
people, especially the ones who are cost sensitive, would say, okay, you know what, we actually do not want a lot. We just want a space that provides that, just provide us with a space that works, and then we have access to power and internet and nothing more. Any other thing extra should come as a value added service, and we're willing to pay for that. So that has
Mm.
also helped us in terms of pricing, because one of our key strengths in this industry, and I'm speaking because I know all my competitors and what they offer. One of our key strengths is that our price, our bulk price, is actually all inclusive. We actually do not separate services from, the core price, and we don't come in midway to give you any surprise figures or, any surprise bill. You're clear from the beginning what you owe or what you intend to pay, and that's continues until the end of your contract. Every
Mm.
other thing that is outside of what you require is seen as an added service. So it's at your discretion to buy, to request, to, pay for it. And that's
Mm-hmm.
how we're able to manage companies, especially the ones that are really cost sensitive.
Yeah. I think thank you very much, Linda. And I think we have a lot more to unpack around cost sensitivity of the market and how services are bundled in a way that you can actually afford it. But before we get into that, I wanted to come to you, Tololope, real quick. Um, I think you have a very similar background with Linda because you
That's
started
correct.
both sides of the table. You've advised both traditional landlords on leasing, you've advised multinational occupiers on traditional leasing, you advise people who want the flexible way out, and you've advised even people who are providing the flexible way out. I'd like to get your perspective on how the market, when I mean the market, is like traditional landlords are perceiving the, I would say, resurgence of managed and flexible spaces. Are they seeing it as a competitor? Are they seeing them as partners? Because the market is shifting, and the worst thing that can happen to a landlord to see this shift or see your potential collaborator as a competitor, or just completely ignore them. Managed offices across the continent is emerging as an institutional product for how people actually lease spaces and interact with spaces. So how are your traditional landlords seeing this space, and what are your perspective on can you still hear me?
Yes, I can hear you. I think I lost you for a second, but I do get the question. So thanks. Hi everyone. Um, So, I wouldn't, to start off, I wouldn't say that the landlords mostly they're seeing um, managed office operators as competition. I think, um, it wasn't even a rude shock how the market, shifted from, multinationals or corporate occupiers generally preferring, flexible office spaces to traditional leasing. I think from the moment COVID hit, it
Oh,
was
well,
yeah, from the moment COVID hit, it was even that wasn't a gradual process, and businesses had to immediately start looking for ways to continue to manage their businesses and adapt to the changes across the world, which resulted eventually in hybrid solutions, or just generally working remotely. And then now we went from that phase to corporate occupiers not trying to return to the office. However, during the period where everyone worked remotely, or adopted the hybrid working system, occupiers realized mostly that they did not need to be in massive spaces to run their
mhm.
businesses. And that started resulting in all those optimizations that we started experiencing, right? And I think for us service providers, the initial stage of that was our clients coming to us seeking advice on how to optimize their spaces. So suddenly they've all realized that, oh, we were occupying 2,000 square meters, and then now we've realized that we actually don't need that much space, because over the period where everyone was adapting to the global change, they realized that they didn't need to have all of their employees within their spaces, right? So that's when that shift started, and immediately everyone became aware. It's a very small world, in this whole
Market.
in this industry, in this market, in this industry, right? The moment a business, an office, a multinational or a local business adopts this style, it cuts across board. Everyone starts to hear about it. So optimization started immediately. Everyone started optimizing their spaces, moving their core staff or client facing staff, leaving them in the offices, and moving the non-core or non-client facing staffs to, like, back office, or making them adopt the hybrid work solutions, or working remotely. So basically, just stemming off of that, you know um, landlords started getting, they had to adapt, right? Initially it felt like operators were taking away their clients, because what happened for some occupiers was that they a lot of them did not renew their existing leases.
Mm,
A lot of them suddenly, because they now realize that they don't need as much space anymore, decided, okay, we're not going to renew our lease. We're going to move, you know, some staff to a service office temporarily, while we figure out what we're going to do with all of these investments that's been sunk into fit out and all of that. Um, then from that, it was a thing of, okay, let's retain this existing space because of all the fit out investments, which, by the way, is usually a whole lot. Let's retain some space and either sublet whatever space we have left. It was a whole lot of space optimization strategies that had to be implemented, and landlords, being at the forefront of it, of all of these changes, had no choice but to adapt. Now, landlords are left with a lot of, vacant spaces. Some of them still fitted out, some of them not fitted out. The question now becomes, what do we do with these spaces? At the initial stage, the majority of these landlords decided to focus on, obviously, bringing in more tenants. They started engaging a lot of, firms and other service providers, that support, like, corporates, and trying to figure out ways to bring in more tenants, attract the caliber of tenants into their buildings, and that, I wouldn't say yielded immediate results, because these same set of occupiers that you're looking to move into your space are also the same set of occupiers that are looking to either permanently operate from managed offices
Mm-hmm.
or operate from really small spaces that caters to the headcounts that they want, seated in offices, right? So it became a struggle, and that's why it felt like, there was so many vacancies across board, and I'll tell you this, the a lot of multinationals, irrespective of all of these changes, will still rather, have their offices, situated in a grade AB, building.
Yeah,
So
the
there is
higher.
no compromise,
Yeah,
yeah, there's no compromise on building quality. The compromise
absolutely.
now is on the space optimization. Do we need this much space? No. What do we, then do with all of these fit outs? They enter into negotiations with landlords. We are at the forefront of it, as providers, advisory. We provide advisory services to a lot of corporate occupiers, and we sit down in these conversations and we're trying to assess the situation, assess your investments, and how to manage or salvage whatever is left. And therefore for the multinationals that are exiting, that's a completely different story. But right now the focus is on how landlords are absorbing the changes. So I think now a lot of them, so I'll say over the last year or 2 years, a lot of them are now partnering with operators. A lot of them are doing that. Now we have operators like Africa Works, Linda, I've got you. We have Reduce, we have Cafe One, we have a lot of operators that entered into the market offering these solutions. And at the time, it felt like they were so expensive, but in the long run, they then became, the providers that was best suited to accommodate a lot of these corporate occupiers. Because when you do your total occupancy costs analysis, you realize that it serves you better as a firm, an organization, multinational, whoever, to operate from serviced or managed spaces. In the
This
long
is
run, it saves you a whole lot of costs. Believe me, I've done these total occupancy cost assessments. It is overwhelming, and
yeah,
that is why you see that shift. That is why you see the spike, the high demand for managed offices.
offices. Yeah,
Yes, and in the long run, the whole idea of having a corner office, having all these massive spaces, it starts to look, or it starts to feel like you're just wasting.
insignificant. Yeah.
Yeah, they become insignificant, and that's why all of these things are happening. So some landlords are remodeling their spaces to meet the demand for lesser spaces.
Mm-hmm.
Some landlords are partnering, like I said earlier, with operators because they already have fitted out spaces that's idle. So they bring in an operator, they have their negotiations. Look, we have the space fitted out already. Modify it to suit your client's needs, and then let's partner together so that you can bring in people and occupiers, to us. And at the end of the day, it becomes a matter of, still trying to generate better income. You know what
Mm-hmm.
I mean?
Yeah.
So you're no longer, losing money. You're no longer losing funds. You're no longer your assets is not idle because now you have tenants in your space and you're still making decent amount of income with that
Income.
idle. Yes, there are certain risks that maybe we don't have so much data that has captured it, like occupancy volatility and the likes. We don't have
Mm-hmm.
like a lot of data on how those, risks are, being managed or absorbed,
Yeah.
because now you have partnered with um, operators who now bring in occupiers for various, lease term periods, right? So it could be short, it could be long, and then what happens when that space becomes vacant again? So these are, I would say, challenges that they are having to deal with because it's new
In the
to
market.
them. Yeah, and I think even for operators, I think even for operators, those are certain risks in their business that they
Yeah.
are also trying to figure out how to manage it, how to balance it out, right? We don't have a lot of data that captures, all of those kind of details, but I think in summary, landlords don't have a choice. Yes, sometimes you don't have a choice. You have to move with the economy. You have to move, you know, in the same direction that the world is moving, and you
Yeah.
adapt. And I think that's what landlords are doing. I think professional landlords and the uh, typical, you know,
Hey, I
look,
landlords.
I don't want to use the term that was in my head. They like I said, they learn from one another. You don't have a choice.
Yeah.
This isn't about pride, right? You have invested in your assets. It is vacant. You figure out a way to
Mm-hmm.
get it running. Otherwise, your building is going to remain idle. You're going to continue losing funds. So it just makes sense to continue to have tenants in your space, even if it's for a short period of time. You would rather
That's
do that than have a vacant space for a long period of time because you're looking for a certain type of or caliber of tenants that will take up your space for a specific period of time.
Mm-hmm.
I
I
hope I was
mean,
able to.
yeah, you said a lot.
Yeah.
I'll just try to unpack them a little bit, even though I might not be able
Mm-hmm.
to touch on everything. I think to even start with your last point, I think I agree with you. The landlords are getting to face the reality of what is going on,
Yeah.
especially professional landlords, especially landlords who have assets that they have to repay capital back on. But we are still seeing landlords, people that I call like HNI landlords,
Mm-hmm.
who are fixated on a certain client profile. They have assets in the market that I know a number of building and spaces, 1,000 plus square meter floor plates that's
Mm-hmm.
been in the market for 3 5 years. The landlord
Right.
is on a particular rent, on a particular profile of client, on a particular lease term. Like they are those people, and I think over time they'll get used to it. Another thing you mentioned, which I would like to just double click a little bit on, is the fact that the market's reaction is sort of a mixed bag. So there are people who have come to the realization that oh, it just makes sense for me to get a I would say a managed space, downsize my team, get a managed space, manage my cost, and all of that. And there are still the multinationals who will never budge on their space requirement. They still want the grade A. They want to downsize
Mm-hmm.
from a 4,000 square meters to 1,000 square meters, but it has to still be grade A. We are seeing that in King's Tower, we are seeing that in Heritage Place, we are seeing that in a lot of these buildings. And we're also seeing some of these partnerships that you mentioned. I mean, Kofisi is managing, I think they'll, towards the end of the year, I expect them to actually manage up to a floor at Heritage Place. And we are seeing those kind of partnerships. The
Mm-hmm.
lower end of the market, the Bs, we'll see Regios taking spaces, managing spaces, and all of those.
Mm-hmm.
So those partnerships are forming,
Yeah.
and some landlords are beginning to optimize, I would say, their space, their assets, and everything they are offering to sort of
Mm-hmm.
fit dynamics. But I think a larger chunk of the manage from a supply slash landlord standpoint
Mm-hmm.
is still not, I would say, has still not come to terms fully with this new reality. But over time, we'll see
Yeah.
more partnerships forming between landlords and operators, where they begin to see themselves as potential collaborators. Because, like you mentioned, Tolulope, it just makes sense for me to get an operator to come and run my space, and we do a revenue share. I know I'm making money at the end of the day, than leaving it empty over a long period of
Mm-hmm.
time. So
Mm-hmm.
thank you for sharing a bit of that. And I think those were a very, very, very useful to point how important it is for landlords to see operators as partners, who bring I would say, hospitality type service to their building.
Yeah.
And
Let me cut in again really quickly. The fact is flexibility is no longer optional.
yeah.
Before, like you said, some landlords are still adamant, and that's fine. But the fact is, eventually, they will have no choice but to become flexible. Otherwise, you're
Mm-hmm.
not ready to remain in that business. You're not ready. You're not going to be able to continue to lose your ROIs. You know what I
Mm-hmm.
mean? I mean,
Yeah.
the banks built, commercial buildings, as their HQ, and made accommodations for additional spaces that they could lease, right? And they wanted, because it's a bank, and I'm sure, you might be familiar with a few of these banks, because they want it to be just one tenant occupying the entire floor for all the reasons they usually state: security. They don't want to, attract too much footprints into the building and all of that. So they want just one client to take up an entire floor that the bank has left. And then eventually they don't find any. One of them, I think it's Standard Chartered. They have, I think it was 989 that, took up an entire floor, I think.
Yeah.
Am I
On
right
a
about that, Linda?
Yeah, yeah,
yeah.
yeah,
So
absolutely.
yeah, they talk about, and I was part of that transaction at the time, and the conversation was, how do you bring in an operator to come and take up a space, knowing fully well that the operator is going to have various tenants? So the exact same thing that you were avoiding is the exact same thing that ended up happening, because you have an operator in your building who then has multiple clients, and they have to come into that building on a daily basis and go to their various offices in the managed space. But before they came to that decision to have that particular tenant, the managed office operator, they had lost a lot of
Good point.
Revenue.
return on investments.
Yeah.
So yes, you can console yourself with the buffers that you probably put in place, because most of these developers and landlords have buffers in place for when their buildings are underperforming and all of that. Eventually you're going to run out of that.
Offer.
Yeah,
Mm.
and you're going to become flexible, and that's why I had to make that point. Flexibility is no longer optional for these caliber of landlords. You adapt to survive.
Yeah, you adapt to
Yeah.
survive.
Or you convert your building into a residential development, and and rent it out.
Thank you to Lokwe, but that's like an extreme end of the of the possibilities. But I think you mentioned a few things that I would like to just I would say touch on a bit more. I think what we're seeing in the market is landlords need to understand that there are some risks that just make sense to get an operator partner to come take them. A lot of landlords are not willing to take on the fit out risk. A lot of landlords are not willing to take on the internal space management risk, the internet we mentioned, the operations, the day-to-day running, and all of that. So it just makes sense a lot of for them to begin to get partners who can come and optimize their assets, optimize the internal spaces, get tenants to come in, get it operated at the best level of standard possible, and get these guys to actually share revenue with them. And in the long run, it's a win-win. And this really takes me to the question I was going to ask Linda and Kelechi. You've been working with a number of partners. I'm not privy to some of the deal structures that you guys are operating on, but I'm really curious to know what is an ideal landlord-operator relationship for you. I imagine sometimes you lease spaces outrightly, which, in all honesty, might not be the most optimized version of a good relationship with landlords. And now that the market is becoming much more aligned to more managed solutions, I expect to see more landlords opening up their doors to more favorable relationships that is beyond just cash and carry, as the case were with the traditional lease. So, what would an ideal landlord operator relationship look like for you as you take on operational risk to optimize and run these assets and share revenue with potentially with landlords? So, Linda, I started with you the last time. Kelechi, let me hear your thoughts first this time.
Okay, so I would say there's two sides to it. The first side is, or rather, I have two kinds of relationships, right? In some
Mm-hmm.
cases, we do a long lease with a landlord, and we just tell him this is what we're doing in this space. Now, some of them say, okay, as part of our agreement, that you have to, and we know you're going to retrofit, but when you're moving out, just return the space to how you met it originally. So all we
Mm-hmm.
do is just agree to that, and that's it. The landlord really has no other business with what I do within the period of my lease, and we
Mm-hmm.
have long leases, right? That's one. Now, there are some other spaces that they are serviced, so they offer some services in addition to giving us the space. So, for example, power, they don't allow us bring in a generator, so we have to use theirs. All of these interesting stuff. So in those cases, we agree on, maybe like a service charge amount or something, and that really is, my apologies. That is the relationship that we have with them. So it varies, right? It varies. What you find in Lagos is different from what you find in Uyo or in
Right.
Oka, so it's very location specific. And for us that we're spread across Nigeria, I mean, I think the goal for me is that by the end of this year there should be at least one cafe one in every state in Nigeria. So I'm excited to see what that looks like. When it comes to establishing relationships with, as an operator, but also as, as an operator, but then with the landlord as well. So yeah.
Okay, thank you, Kelechi. And Linda, before you answer that question, I would
Mhm.
like you to answer the same question. How what constitutes an ideal landlord operator relationship? And in addition to that, I would like you to just touch on the cost sensitivity of the market. Whether it's B2B you are dealing with or B2C you are dealing with, managed solution, a lot of people using it is for, like Taiwo mentioned, is for balance sheet efficiency. They want to be efficient. I don't know how I can say it nicer, but efficiency in this market, a lot of the time, comes down to balance sheet, to be very honest. How are you building? How is that cost sensitivity influencing the products you introduce to the market, how they are priced, and how is your landlord relationships, helping you achieve competitiveness in the market? I don't know if I was able
Yeah, of course,
to
very clear.
say.
So let me start with the last question, which is the cost sensitivity. Like I said, um, we treat each occupier or each client on a client basis. So when we engage a client, we tend to ask key questions just to understand what the request or what the requirements are. And for the ones that are a bit price sensitive, we tend to ask what is that key element for them that is non-negotiable. For some people it is flexibility, for others it is just a space. Regardless of how that space looks like, it doesn't really matter. It's just a space.
Mm,
So when we do engage those clients, then it sort of helps us to build in a plan or to build a specific package for them solely because we know that they are price sensitive. We've also had situations where clients have come in, and I'm talking about a multinational, have come in and have said, you know what, we know that internet is part of your package, but can you net that off for us? Let's see what that comes in. It's always not marginal, but they just want to see that you are a bit flexible to such
flexible.
conversations, which we are, at that point. Now it has helped us in how we create our plans, in how we also develop our spaces. Right now, we're doing a lot of so because we're a Pan-African brand, I think let me just start from outside Nigeria, yeah. Because we're a Pan-African brand, we're operating in 8 other countries across Africa, and they have different dynamics, different
Mhm.
requirements, as the case may be. In other markets outside Nigeria, we are noticing that the landlords are a bit more flexible. So, in
Mm,
fact, have conversations with landlords where you secure one floor, and there's that flexibility. If you need to secure an additional floor, it's already imputed in your contract. There's that flexibility for you to scale up
and
as
scale
you,
down.
yeah, and scale down as you grow. Those
Yeah.
markets are already advanced for such conversation. But we know that in Nigeria, like Tolu rightly mentioned, it's a bit difficult because a lot of landlords are always, when you approach landlords, it's more of how much do you want to pay? Oh, you must pay something.
Yeah.
What do you want
Mm-hmm.
to drop on the table? It must center around price and cash and all that conversation, which makes it a bit difficult for us, because sometimes you might not. It's not every time that you have to look at cash. It's not every time you have to. There are times when there are different reasons for you to seal or conclude a transaction. And I'll give you an instance. There've been a property in the market for close to 5 years. It's been empty. Landlord has been losing money on a daily basis, but it's still very reluctant to move because it's still centered around cash price. What do you lay on the table?
Mm-hmm.
But I can sense that, as Tolu rightly mentioned, is beginning to change because he's now willing to engage more. And for some of those landlords, you need to sit down and ask yourself very key question. What is your objective? Are you solely interested in cash? I don't have a say in that. Are you looking for a particular caliber of
Fine.
clients?
Mm-hmm.
Maybe. Are you looking for, are you just in need of the space to be activated? Then the operator can help you in that,
Yeah.
right? If that is what you want, at least we help you absorb demand, we help you activate your space, while you're also still waiting for the right clients that you're looking for. And what most people don't know is that we actually take a lot of risk. There's a lot of risk involved in the business because
Mm-hmm.
you're taking on a space when you actually don't have actual demand. You're hoping that by the time you take on the space, you'll be able to attract your community base into that space. That's a risk in itself. There's
Mm-hmm.
also the CapEx risk. We're investing heavily in fitting out a space. My fit out costs heavily. It is heavy. The amount is heavy. Who bears that? So at the end of the day, right, the ideal partnership will be one where both the landlord and the operator sits down to have a very honest conversation on what each person is
What they care
expecting.
about the most. Yeah.
Yeah, and how we can sort of reach a middle
Make it
ground.
work.
Yeah.
Yeah, that makes sense. Thank you. It's good you mentioned that. I think one thing that the market is, how will I say it, hasn't really worked around enough, like you rightly mentioned, is how difficult it is to work with Nigerian landlords. Compared to other markets, it's much easier. Honestly, and and I can tell from firsthand experience, a lot of the landlords here are, I would say, cash driven, and so you find landlords across the board actually, whether you are talking um, commercial spaces or even residential, they give spaces to the highest bidder. They don't care about, striking potentially long-term beneficial relationships. And does just that perspective. And if you compare Pan-African, you will see that gap. And if you even compare locally across the country, and Kelechi, you would agree with me that you will find landlords reacting differently in Lagos compared to Port Harcourt, compared to Abuja, compared to Owerri. I would
Absolutely.
like to say that they are what's incentivizing them is different, right?
Right.
And it always makes sense to find good landlords to work with, good partners who can see you as a risk bearer, just like they are, You're
Yeah.
absorbing fit out risk, you're absorbing vacancy risk, you're absorbing operational risk, you're absorbing inflation risk, because if Starlinks increase their rates tomorrow, you are not going to reprice with your landlord. You are most likely not going to reprice with people who have locked in, leases with you,
Yeah.
and on and on. So I think an ideal relationship, Linda, like you mentioned, is one where both parties are actually very transparent around what their priorities are and find a workable solution. I think I'll just do a quick final thought questions. So on this call, we have a landlord. Tolulope is a landlord, even though a lot of times she doesn't admit it. She represents a lot of the landlords in the market. We have operators on this call and we have occupiers. Taiwo, I'd like to start with you. If you are leaving operators in the space with a few thoughts in just 30 seconds, what do you care about the most as an occupier that you think echoes the wider opinion of corporate occupiers, especially multinationals and Fortune 500 companies like Canon, that they expect to see from spaces to institutionalize this market and make it something that is globally competitive.
From an occupier standpoint, to be a plug and play, we always look towards a plug and play format
Mm,
that was ride on good service delivery, tenant experience, and operational excellence.
I,
Where as occupiers, we're moving from operators providing spaces to providing solutions.
Hmm.
mm, mm.
That would be,
Providing services.
yeah, moving
Yeah.
providing space, providing solutions.
So
Yeah.
that makes sense, and thank you, Taiwo, for sharing that. I think the most important thing, which I believe is beyond even office and space as a service, is a wider issue in the Nigerian market. Is quality of service, consistency of service delivery,
Mhm.
maintaining standards, standards that can benchmark. Taiwo's experience if he goes to Canon's office in New York or any other region of the world, they need to see,
Right.
and I think for multinationals is particularly important because Tolulope, like you mentioned, we still have multinationals coming to the market today. They can never be in
Mhm.
a great building. They will be in heritage
That's
place,
true.
even though it's 10 square meters they are occupying there. They will pay $1 million for that 10 square meters in heritage place. And the reason they are
That's
doing that
correct.
is service excellence, is quality of build.
Mm.
It's something that is comparable to their experience, the rest of the world. And I think Taiwo, thank you for mentioning that. That is a key takeaway for operators in this space. We need to start building, not to benchmark your competitor next door, but to benchmark your competitor, which is the office that these guys are coming from in in
Mhm.
in in New York, their London office, their other office around the region. Linda, I was in your office in Cape Town, one of your offices in Cape Town, and when I came to visit you in Victoria Island, sorry, I'm saying it, but I didn't feel exactly the same. So that quality benchmarking and just that level of excellence, and I think is a major thing. Somebody, if Canon leaves their office in in other markets and they come walk into their office in Lagos, they shouldn't feel so different, right? And I know Taiwo, you can allude to this maybe when your folks come in and and stuff like that. So I think it's a major point, and I'll
Yeah.
just leave that
And I
there.
think Martin, I can also agree with that, and Linda can attest to this. When JLL entered the market back then in 2014, we
Hmm.
operated from a rigid space at Molina Towers. And then one of our clients at the time was the Wings Office Complex. And then when the Wings Office Complex, became fully operational, we were one of the first tenants to move into the Wings, because if you've been to any of the JLL office in any
It's
part of
best.
the world, you
Yeah.
realize that exactly. And it was kind of like an essential um I don't want to make it just about the brand image, but it was just the norm because again, we had a lot
It's
of
a
our
requirement.
colleagues.
It's a requirement.
Yeah, we had a lot of our colleagues from all over the world coming in on a fly-in, fly-out basis, depending on the transaction we're working on. And where would they want to be? It would be in a grade A office building because, like you said, benchmark, across what they're used to. So,
Yeah.
and I think this is even one of the things that give birth to the supply of grade A office buildings, in Lagos,
In
and then
Lagos.
yeah, in we can say in Nigeria, but let's start from Lagos. So
I agree. There's that benchmark, and personally, I've seen it a lot with a lot of occupiers. They come in, they tell you very cleanly what their requirements are, and they are not going to budge on it.
yeah,
I've even had occupiers require a very specific things like ceiling to floor ratio within the
yeah,
building,
yeah.
ESG considerations, security and access control. They want to know that level of detail. I have a fit out company that did a space for a multinational, very popular one in Accra, Ghana, and they required some bulletproofing of the space, right? It is part of their requirement, and their CEO is going to sit in that space. If he's bumped, they don't want the guy to die. So it is their requirement, and so we need to start building, like Taiwo mentioned, at that level. Start delivering service at that level. Start curating experiences at that level, so that we can essentially pioneer this shift. Because honestly, nobody will move from a traditional leasing route to something that is managed but still mirrors the mediocre service that they are used to in the traditional route. So there must be a
Mhm.
difference to be able to create value for this market. And thank you, Tolu Lope, for mentioning that. So very quickly, Tolu, you are well. Before I come to you, Tolu, Linda, let me start with you. Um, what if you are gonna strike a deal with a landlord that Tolulope is representing? How are you thinking about a partnership in a way that creates long-term value beyond just cash? We already know, and Kelechi, this question I would also like to hear your thoughts. We already know how very cash driven the market is, from a landlord standpoint. How are you thinking about possibilities of creating, forming relationships that can deliver value at scale, for both parties, especially in this market? And how are you thinking about risk sharing, and yeah, and this sort of stuff? So Linda, let's start with you this time, and then we'll go to Kelechi.
Okay, so so it depends. Tolu actually part of alluded to this when she said landlords have no option but to adapt. So you look at it, do you want stability or you want to be able to adapt? Do you want adaptability? And for that, there has to be, there has to be some form of,
Compromise.
yeah, compromise actually from
Mm-hmm.
both parties, because like I mentioned to you, there are a lot of risks that we carry as well as operators, which I've mentioned some of them, including operational risk and
Mm-hmm.
price risk as well. So if it's going to be just for us to meet your numbers, for us to meet your price, then it's now a one-sided conversation. Ideally, in the ideal world, if I'm talking to a landlord, I would I'll first of all look at something that offers me flexibility, which is very important for me and for my business, because of the kind of clients that I attract as well. I would like something that allows whatever it is. If there's a sharing ratio, whatever. But the bulk of it is that there's flexibility as much as possible.
Mm-hmm.
Flexibility for me to scale, flexibility for me to also downsize in the case, as the case may be. Um, you
Rent
mentioned about
free,
our
there are
Cape
no
Town.
income.
Sorry?
I mean, like rent freezes or rent free
Yeah,
period where there are no
rent-free
where there's
period, definitely, definitely. You mentioned that about our Cape Town office, right? And then what is important in SA, in Joburg, when one of the biggest spaces in Joburg, we have in our contract the ability to actually scale. We actually occupy a floor, but in our contract, we actually have 2 floors. So we have that flexibility to scale to the
Can
second floor. And then, it can actually be amended but again, like you said, there's a lot of education that needs to happen. And the likes of Tolu,
Right.
thank God they are the ones who are representing landlords. So they are a bit exposed, so when you're engaging them, it's not a
It's like
hard
a double dip. We
yeah,
represent
so
both the
they're able
landlords
to
and the
represent, they're able to
occupiers.
explain things to the landlord, from
Yeah.
an overview of what they see in the real estate space. So that would be my
Right.
contribution. Yeah.
Thank you, and I think you are absolutely right. We really can't build the market at scale until there is, I would say, this alignment in priorities between
Right.
operators and the way they see each other, not as partners and not as a cash cow, like I would
Yeah.
say.
Right.
A lot of
Right.
landlords are just looking for, oh, whatever you want to do, I don't care, just give me money, give me money,
Yeah.
money. So I think
Right.
that perspective needs to shift, and they begin to
Yeah.
see people as potential partners. And then Kelechi, just back to you. What are the things you expect to see in a good landlord relationship, even as you scale your product across the country?
So, I mean, I agree with everything that Linda said, right? But I think, interestingly, towards the end of last year and early this year, I met a couple of landlords who were not interested in collecting rent from me or lease anything. They were like, okay, you know what, come in, set up, and then we split revenue or we split the profits. I'm now the one that is running away because I'm like, do I want to let you into my, do I want to let
Yep.
you into my boat? you know but I will be very honest, I was surprised, pleasantly surprised. But then it forced me to really sit down and think about whether that is what I want, as a business. So we haven't concluded any of them. There are a couple that we're exploring, and I'm interested to see how it plays out, if I'm being honest. So what do I expect to see? Your last statement captured it perfectly. They see us as the cash cow. I am looking forward to the time where people are okay splitting the risk, maybe 60-40, 50-50, whatever the case. I'm also looking for a case where they're not just interested in collecting money and running away, where they're
Mhm.
actually interested in the same way we as operators are interested in providing good service. I'm looking forward to a day where the landlords are interested in providing good service and not just collecting money, and disappearing. So that's my input.
Okay, thank you. That makes sense. That makes sense. I think I agree with you. I think a lot of the times we tend not to, we're not, I don't think people know what they want until it's presented before them. Like Kelechi, you mentioned,
Mm.
I think if you are paying rent, you will think that, this rent I'm paying, maybe a revenue share would be better. And then you see a revenue share and you're like, do I really want this guy in my bed yet, or do something like that? But I think that for operators, it might be a lot of testing things out in the market to know what would actually work best for both parties. In theory, all of these are just I would say thoughts that we are putting out, but it would require executing over time in real life to really find what's working. Because it could be revenue share, it could be just paying the guy off, it could be paying the guy off, but very flexible payment structure that allows you to breathe. It could be anything, honestly, but we wouldn't know what it is that would move the market further until we begin to test and see a lot of this, in the market. And that will bring me back to closing thoughts from Tolu Lope. Tolu, you advise a lot of landlords, and I'm sure this is not new conversations that you're having with them around asset optimization, around bringing in operating partners, around delivering quality service beyond space to attract the ideal customer profile that everybody is looking for. What would you tell operators in this room from a landlord standpoint that around how they should be positioning their offering, to landlords to be able to get buy-in, especially knowing that, I mean, occupancy vacancy rate is pressing these guys, but they are still not desperate. There are still a lot of them that are very comfortable where they are. They don't mind waiting 4 years, waiting 5 years, waiting 3 years, until they find, or they hit the golden, they find their golden goals, if I will use that
Yeah,
word.
yeah.
What will you tell operators in this room around how they should be framing some of this conversation to be able to get buy-in from landlord? Considering, I mean, you've been around this guy for a while, you know how they think,
Yeah.
you know what priorities.
So I think it wouldn't be so much, what, I will be telling the operators, because at the end of the day, it's like, you have a product you want to sell, you know how best to sell
Mhm.
your product, right? But I will talk from, a landlord representative standpoint. If I'm
Mhm.
advising my clients, quote, the landlord, to, optimize their assets by being more flexible and, partnering with like a managed office, I think what, and you'll be surprised that a lot of these landlords are not educated on that front. So what I mean is a lot of them actually may not necessarily have the exposure, to the fact that there is it is possible to collaborate with, operators
Mhm.
successfully. So
Yeah.
it's like it's human nature, when something new is introduced to you, your first reaction is to take a step back and assess it. Do I want
Mhm.
to, do I want to dabble into this unknown
Yeah.
territory? What are the risks that I'm going to face if I were to do this, and how do I manage those risks? Those are like the first, as a business person, those are like the first, few thoughts that you have. So, and as
Mhm.
for me as an advisor, I'm going to be like, okay, you when you then conclude, or even whilst you're in the process of making the decisions to partner with, operators, I then start to educate you. For starters, for me, I would, focus more on the caliber of operator that you want to partner with, right?
Mhm.
What's their track record like? Where are their maybe like existing offices? What caliber of
Tenants are
occupiers
there.
are they accommodating?
Mhm.
What kind of feedback are these, occupiers giving regarding their services? Linda and Kelechi said a lot about, how, they don't compromise on, quality service delivery. But it's
Mm.
easier said than done, because it's one of two things. You either prepared well to be is a managed office operator, or you went into it, made a lot of mistakes, learned from that mistake, and ensure that, you never compromise on, quality service delivery, right? So the only way that happens is, you build your track record, and over a period of time you become, trusted, a trusted operator. You have people start to talk about the fact that you have integrity and all of that. So again, my first thing would be to advise my clients to focus on that, identifying an operator that has a solid track record, right?
Mhm.
How well are they able to lease, retain, or scale, occupancy across cycles, right? So that, I think for me, that's gonna be like the first thing. And the second thing, like I mentioned again, operators also learn from, their operational experiences, right? So how disciplined are they, you know, in their operations, right? How do they manage their power, service delivery, cost control, and demanding. They make, just because they're in a managed office, I can tell you for a fact that some of them make unrealistic demands. Am I right? So I think for me, those are kind of like my go-to if I'm advising my clients. So how well have they demonstrated, operational discipline? What's their track record like? What feedback do you have from clients? Are they transparent, in their performances and the for instance, with landlords you have to um, be transparent with like service charge, for instance, right? So transparency with the operators for me is essential, and how well do they manage, their teams as well, and then the quality of the team that they have managing, their offices is also essential. So when you gather all of that information and then you start entering into conversations with operators and you assess, their deliverables, their track record, you are then able to make an informed decision.
Yeah, that makes a lot of
So,
sense. Thank you.
yeah.
Thank you, Tolulope, for sharing a bit of that. Thank you, guys. You've spoken so well across the market. And I just want to say a big thank you to everybody for sharing so freely from your experience and perspective. This conversation has been really, really engaging. And I believe a lot of the people who are joining us from LinkedIn, let me even quickly check if there are new questions. I think I saw a few questions. Let me see if there are a few questions. So I think there are not any at the moment. And thank you so much, everybody, for joining and for sharing so much from your experience and your thoughts. Like I mentioned, over the past 3 years, we've been tracking data in this market, and we just launched a new report that I would like for you all to spend time and engage with. Can you guys see my screen?
Yeah.
You can see my
Mm,
Not yet.
No,
no,
it
not yet.
hasn't come up yet.
Oh, okay. It should be up. How about now?
Not on my side, not yet.
Not yet, not from my own end, not yet.
Just let me see.
You just shared it as a link.
Oh,
Oh,
not. Okay. So I'm just gonna share screen again. Let me share this. I think you should be able to see it now. Can you see my screen now?
it's still blank.
Oh, share screen. You know what? Just give me a second. Um, okay, can you see now?
No.
I'm not sure what the issue with this is. Okay, you know what I'm gonna do. So we just launched a new report anyway. I'm trying to share my screen to show you all, but I guess it's having a bit of trouble. But I think in a few moments you should be able to see it. So we just launched a new report for this market, and I
We
really
can
love
see
for
it
you.
now.
Oh, beautiful, beautiful! Finally, the report is live now. It just analyzes the managed office market in general, everything managed, everything flexible, everything co-working, into this concise report that I think you guys will find very helpful in terms of understanding the market, the local players, who is building what. Please confirm you can still see who is
Yes.
building what
Yes,
across
please.
the market, understand supply, understand demand, um, understand who are the top operators in the market, understand how value compares, understand supply where these um, offices are, where they are located, and their business model and structure, stuff around that. Understand demand, who are the occupiers, are they multinationals, are they local firms, how does that split? Understand their sector, understand their regional focus, are they focused on
Mommy, can I
Nigerian?
turn on?
Sorry? Okay. Understand
Please
whether they
carry on.
are Africa focused, globally focused, or Nigeria focused. Understand even things like whether they've raised money, who are the top guys occupying spaces in the market. It's a lot to to unpack, understand the outlook of the market. Actually, across Lagos, across Abuja, across Port Harcourt, it's a lot of data that we've tracked and analyzed over the years, and I think this is our best stab at putting like giving a snapshot view of the market. So operators, occupiers, and landlords, and even investors, and just general participants in the market can get a sense of what is happening and make informed decision. Because one of the problems we are seeing is this market is growing even faster than the traditional market has grown rather over the years, but nobody is tracking, nobody is understanding, helping people make sense of the market. Nobody is helping people document what's going on in that market. So we've done that work. This report will go out to everybody. Please download it. Please share it with people, your colleagues, your friends, your partners in the market. And I hope that this materialize into more detailed studies for some of you all specifically. We'll be happy to help with your strategy and expansion. So it's been a very enriching conversation. Thank you all again for taking the time and for joining in. Officially, this report is live and we'll be sharing it with everybody. And I hope you guys have an amazing weekend. Oh, sorry, today is not Friday. Why,
It's
why
not.
do I keep
It's not
feeling it?
Friday yet.
We're already in the weekend mood.
I'm already
It's allowed. It's allowed.
yeah. But thank you all for taking the time, and do enjoy the rest of your evening.
Thank you for
Thank
having
you.
us.
Thank
Thanks,
Thanks,
you.
everyone.
Thank you,
everyone.
Thanks very
everyone.
much.
Bye
Bye.
everyone.
Thank you.
Enjoy.
Bye.
Bye, guys.
Bye.
Bye.